Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about VSE CORP quarterly report. VSE Corporation offers a range of businesses and services that cater to the aviation industry. These include aviation aftermarket parts distribution, maintenance, repair and overhaul, MRO, services for air transportation, asset services for commercial market, services for government markets. VSE Corp stock price skyrockets. A year of exceptional growth in the past year. VSE Corporation's, VSEC, stock price has surged by a staggering 118.03%, reaching new heights as of October 24, 2025. This remarkable growth can be attributed to several key factors that have contributed to the company's exceptional financial performance and strategic business initiatives. Record-breaking financial results, including a 38.9% increase in revenues and a 58.4% rise in adjusted EBITDA, have been a major driver of VSE's stock price growth. The company's earnings have increased by an impressive 125.5% over the past year, with net profit margins expanding to 4.4%. Additionally, VSE has raised its full-year revenue growth guidance to 38–40%, reflecting confidence in continued strong performance. Strategic acquisitions, such as the recent agreement to acquire Aero 3 for $350 million and the acquisition of Kellstrom Aerospace Group for approximately $200 million, have also played a significant role in boosting VSE's stock price. These deals have expanded the company's global presence, enhanced its consolidated adjusted EBITDA margin, and strengthened its position in the aviation aftermarket. Furthermore, VSE's focus on the high-margin, high-growth opportunities within the aviation sector has paid off, with the company securing multiple new distribution and MRO program awards in the third quarter of 2025. These combined factors have contributed to investor confidence in VSE's strategic direction and financial health, resulting in its stock reaching new 52-week and all-time highs. The primary drivers of revenue growth or decline can be identified from the financial summary. On one hand, the company experienced significant revenue growth due to several key factors. The acquisition of Kellstrom Aerospace and Turbine Weld contributed to a 39% year-over-year increase in quarterly revenue. Additionally, new distribution contract wins and improved demand for commercial aerospace and business and general aviation products and services also boosted revenue. Furthermore, solid end-market activity in global commercial air travel supported the growth. On the other hand, the company faced some decline in revenue due to specific factors. The sale of the fleet segment in April 2025 led to a decline in revenue. Moreover, revenues from discontinued operations declined by $173,168,000 compared to 2024. Government revenue also decreased significantly, with a 43% drop in the 3 months ended September 30, 2025, and a 64% decrease in the 9 months ended September 30, 2025. Overall, the company's revenue growth can be attributed to strategic acquisitions, new contracts, and improved market demand. However, the decline in government revenue and discontinued operations had a negative impact on overall revenue. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes in the past year. In Q3 2025, net income decreased by $7,738,000 compared to the previous quarter. This decline was also observed on a YTD basis, with a decrease of $4,126,000. However, there was an increase in net income for the 9 months ended September 30, 2025, amounting to $22,201. Profit margins have also experienced fluctuations. The operating profit margin decreased from 9.88% to 3.57% in Q3 2025, while it increased from 6.86% to 7.07% on a YTD basis. Conversely, the net income margin saw a decline from 5.7% to 1.4% for the 3 months ended September 30, 2025, and from 0.4% to -0.2% for the 9 months ended September 30, 2025. These changes suggest that the company's financial performance has been impacted by various factors, leading to a decrease in net income and profit margins in some quarters while showing improvement in others. The company's financial performance indicates a significant issue with its ability to generate positive operating cash flow. For the past 2 years, 2025 and 2024, the company has reported negative operating cash flows of -$10,652 and -$86,412 respectively. This trend suggests that the company is struggling to manage its expenses and generate sufficient revenue to cover operational costs, posing a significant challenge for its long-term sustainability. The company's financial performance has shown a notable improvement in its debt levels and interest expenses. According to the provided summaries, the total debt decreased by $51 million as of September 30, 2025, compared to the previous year. Additionally, interest expenses have also seen a significant reduction, with a decrease of 52% for 3 months ended September 2025 and 33% for 9 months ended September 2025. The new credit agreement has provided a lower interest rate, further contributing to this decline. These changes indicate a positive trend in the company's financial health. The aviation segment experienced a mixed performance in 2025 compared to the previous year. Despite an apparent error in revenue figures, it is clear that revenues actually increased. However, operating income saw a notable increase from $38,317 to $57,104. On the other hand, net income decreased from -$2,262 to -$1,864, indicating a slight improvement but still a loss. Management is optimistic about the company's outlook, citing its strategic initiatives as key drivers of growth. These include expanding existing capabilities, introducing new products, increasing capacity, and adding new capabilities to support recent acquisitions in high-growth markets. The company also has sufficient liquidity to meet its operational needs over the next 12 months and beyond, providing a solid foundation for future success. The company has made several strategic moves through acquisitions and divestitures. Key acquisitions include TCI, April 2024, Honeywell FCS, September 2023, Kellstrom Aerospace, December 2024, and Turbine Weld Industries, LLC, May 2025. On the other hand, the company has divested its fleet segment in April 2025 for up to $65 million in earn-out payments. The company has a history of paying out dividends to its shareholders. Since 1973, the company has consistently paid cash dividends every year. In addition, for the 9 months ended September 30, 2025, the declared dividend per share was $0.30 and total dividend payments for that period were $6,195,000. Concerns about inventory buildup and supply chain disruption. There are valid concerns regarding inventory buildup in the company's operations. The timing of large opportunistic purchases and distributor agreement requirements can significantly impact inventory levels, as noted on page 35. Furthermore, the presence of inventory provisions, mentioned on page 19, suggests that issues with inventory levels may be a pressing concern. These factors collectively indicate potential risks to the supply chain, underscoring the need for careful management and mitigation strategies. That concludes the financial summary for VSE CORP. Feel free to comment below, and I will be happy to answer them when possible.